Amazon.com, in the more than 26 years since its founding, has been largely defined by its creator and longtime CEO Jeff Bezos, who also doubles as the world's richest person. Considering a dizzying mix of factors at play in the stock, including antitrust concerns, an incredible holiday quarter, and strong price momentum, it's understandable for investors to ask themselves, should I buy Amazon stock? In this video, we'll go over some of the risks of investing in Amazon stock to try and help you make a decision. Valuation. The stock isn't cheap, trading at nearly 3 times 2-year forward sales estimates. That's the highest valuation the stock has seen since 2004. Additionally, the stock is trading with a free cash flow yield of 3.5%, which also happens to be at the lower end of the range over the past 10 years. Both multiples tell us the stock is expensive compared to itself on a historical basis. The risks. While the fourth quarter was a successful one for Amazon, the company faces risks of overvaluation in addition to regulatory risks. The stock currently trades for nearly 100 times earnings, and Amazon's 44% revenue growth last quarter sets a tough precedent for growth going forward that will be hard to keep up with. Even though first quarter projected revenue implies between 33% and 40% growth, its pace will likely be tough to match in later quarters as Amazon laps some of its blockbuster 2020 quarters. With Amazon's stock price up nearly 70% in the last year, there's little room for error moving forward. Amazon is an expensive stock, forward-looking P/E ratio of about 60, prone to sharp pullbacks. It regularly experiences pullbacks of 20 to 30%. If growth is disappointing in the future, or there is an unexpected setback, such as regulatory action, the stock could experience another pullback. Amazon itself is currently under scrutiny from both US and European Union regulators. This means it's not likely to be suitable for risk-averse investors. The other problem is that interest rates are rising now. Despite the stock going nowhere for months, it's growing more expensive relative to the 10-year rate. That's because the 10-year has risen dramatically over the past few months, and that's pressuring the stock when comparing its free cash flow yield to the 10-year. In fact, the stock is now more expensive on a relative basis to the 10-year than it was in late 2019. It would suggest that the stock has been fully adjusted for the low interest rate environment. Walmart and Target are both real e-commerce competitors for Amazon in the US, while individual vendors and brands also threaten to do more direct-to-consumer business online, cutting out Amazon as well. Microsoft and Alphabet are Amazon's main rivals in cloud computing. Bottom line, should you buy Amazon stock? The reason many would buy Amazon stock today is that they believe the company is only going to get bigger in the years ahead. In many countries, the group is just getting started. In the UK, its market share in online shopping is still under 10%. By contrast, in the US, it's around 40%. This leads many to believe there's substantial growth potential. It's not just about online shopping though. Investors are really excited about the growth potential in cloud computing. The cloud computing industry is set to grow at around 18% per year between now and 2025. Given that Amazon is the #1 player in this space with its AWS offering, many think that the company can generate huge growth here. Even with Bezos stepping down as CEO in the second half of 2021, the company is firing on all cylinders and has better growth prospects than most companies just a fraction of its size. It's a must-own for long-term investors, and still up by almost 27 years after its birth. If you have any further questions, make sure you leave a comment below. If you'd like more daily finance content, then make sure you hit that subscribe button to join our community of aspiring entrepreneurs and investors.